In this video, I want to talk to you about some of my views on Bitcoin, and then we'll get into the chart. This is important because it is the reason I came up with this metric. So Bitcoin is the most transparent and free currency that's ever been made. Satoshi's inception of Bitcoin was fair, with a lack of desire for power. We can even see this on the blockchain since everything's public. So an interesting fact about the wallets that we associate with Satoshi is he could have mined much more Bitcoin than he actually did in the early days. He turned off his miners every 5 minutes after finding a block so that he added just enough security for the blockchain to work properly, not experience any attacks, and so that smaller miners could have an opportunity to find the next block. And then he eventually turned off his miners as more people came into the network. And to this day, he's never touched, or she, or they, have never touched any of the original coins. Eventually, when he left Bitcoin to the people, that is, in my opinion, something that will be remembered throughout history. So Bitcoin has historically outperformed all other assets, but that doesn't mean it's without any fault. It's traded like any other currency, asset, or investment. There are early holders or long-term holders. There are those who learn about Bitcoin when the price is going up, and even those who keep learning and using it even when everyone's telling you that Bitcoin's dead. So psychology, but also reason, plays a huge role for Bitcoin. Whether the underlying technology agrees with that or not is irrelevant. Throughout its 16-year history, that's all been true, right? So the reason I bring this up is because I wanted to determine the following question that came from these ideas. What is something that historically can tell us when Bitcoin's experiencing these extreme regimes? Periods when Bitcoin is really being heard around the world. Your friends, your parents, and even you spread the idea of Bitcoin. Naturally, you might want to pick some up. In my opinion, that's a good idea. But and being a part of this technology, this movement, is something beneficial for everyone. The more people use Bitcoin, the better, in my opinion. So this metric asks the following question. Relative to what's happened in the past, from all prior days, weeks, or months, any time that Bitcoin's been traded, how much volatility have we experienced cumulatively relative to what we call these long-term holders throughout time? Those individuals who really understand Bitcoin know what they have and that it is inherently valuable. So specifically, the metric tracks when each Bitcoin last moved on chain and identifies the coins that haven't moved for over 155 days, which we define in the on-chain world as long-term holders. For these coins, we know the exact price that they were last transacted. That becomes what we call the cost basis. So the long-term holder realized price in purple here is the weighted average price of all these long-term held coins, or in other words, the collective cost basis of long-term holders. When we calculate long-term holder market cap minus the long-term holder realized cap, we're basically measuring the aggregate unrealized profit and loss of all long-term holders combined. And then when we divide the standard deviation of the long-term holder market cap, you get what I call the profit to volatility ratio, the long-term holder profit to volatility ratio. And so whenever this historically has gone under 1 or below zero, this means that the current traded price has fallen below the long-term holder cost basis, or the realized price. In other words, collective long-term holders are no longer in profit. This rarely happens, but I wouldn't be surprised in the future if it doesn't go below zero. It may happen for sure over time, but yeah, I do think there's a chance this might not go below zero. Just because as more long-term holders keep their Bitcoin and don't sell, but you could also argue that when long-term holders do end up trading their coins or selling, the buyers of those coins that have been sold can become long-term holders themselves, which naturally would create sort of a floor for this ratio to reset from, or the cost basis to reset from. So let's dive into the chart and dive into the numbers for this specific metric. First, in 2011, in the peak price here, we had a we first hit a profit to volatility ratio of 3.770 on the all-time high. Next, in 2013, we hit a maximum value of 4.172. And then for 2017, the peak value that it hit was 5.168. In 2021, in the secondary peak, which was the all-time high for the price, we hit 3.732. Now, this cycle, the local max that we've hit has been 3.247. Let me first start by saying no one can predict the future, and this is just a math equation at the end of the day. It's not going to tell you for sure when to hold or when to take profits, and certainly it's not going to tell you the exact top. But historically, this metric suggests that we're starting to get into this overheated territory. If we quickly take a look at 2017, which is sort of an outlier relative to all the others, when did it first hit 3.25, which is kind of similar to what we're at right now? It did it at so it kind of jumped from 3.160 at a price of around 12,000 at the time, all the way up to 3.775 or 3.755 at a price of around 14,000. So that happened in one day. So we can probably sort of guess that it hit it around a price of $13,000 or so. It hit it at 3.25, like around 13,000 or so. So the price closed out at 18,300 the very next day at a profit to volatility ratio of around 5. It did go a little bit of a percentage higher, but not by much. So for this cycle, I do think there's a very real chance this can continue to go up. It hasn't hit these extreme levels like we hit them in 2021, 2013, or 2011, just historically. And so I think after September is said and done, we'll start to see an uptick in this, especially in the long-term holders cost basis, in my opinion, but not by a huge margin. But I do think there's a chance it could increase. So yeah, I wanted to just make a quick video and keep this one short. As always, you can check the metric out and others as well on my website, chartinspect.com. I have a lot of on-chain metrics that you can look at. So yeah, thank you guys for watching. I'll see you in the next one. Bye.